with a market breakdown of the Euro US dollar currency cross. We'll be talking about the Forex as well as the futures market during this presentation. With that, let's get some business taken care of here with our disclaimer. It's a normal disclaimer you find on any financial website or program, and it's just basically highlighting this is for illustrative purposes and educational purposes only. So let's take a look at this chart right here. We have the Euro US dollar currency cross, which currently is still having a positive day. And you can see that there was a nice higher move low that was set a few sessions back, and from that low we have had a breakout, and you can see that blue descending line. It was the bearish resistance and the slope of the bear trend over the past couple months, leading into that recent low. Now, so far we have off that low of basically a week and a half ago, right down by a 111 even, we've had a lower move high, but then we had a higher move low, which was our first indication of a potential change in trend, or at least a neutral trade developing, which this may be just a big wide range trade is about to, the market may be settling into. But let's take a look at the indicators to see whether that is the most likely scenario or not. So, one, we have the market that has rallied above that blue sloping line, taking out critical resistance and also indicating a potential change in trend. Then we have the higher move high, which was recently set yesterday and confirmed also today with another higher move high. So that being said, on a fundamental basis, we have the breakout as well as the higher move high and the higher move low. Right now we would say that the market is definitely now in a neutral to higher posture. So you can see there's that lower yellow line, which is a directional pivot off of a low back around the beginning of April. That also extends back to the weekly and monthly charts at that level. So that's a good directional pivot for the bulls and the bears out there. Trading above that level, I would say the market is in a buy dip scenario or in a range trade scenario from that 111.83 area up to that first brown pivot line, which is the high of today at 112.77. And that would probably where you would see most of the trading over the next day or so as the market digests the recent rally off of the lows. Once again, if you look at where the market's trading right now, it's been really in a very tight range trade for the past couple of months, and now it's just trying to push the upper extremes of where it's been trading over the past month. Now, if you look over at the top of the chart, there's two other yellow lines. Target number one of $1.1317 and $1.1374. So that's probably a good target band for bulls if you want to look for a longer term directional trade from where the market's at right now. Now, from where it's at, right, it's at $1.1246, and for that kind of a move, you're only looking at basically a full dollar move, which is not that extreme over the next week and a half, but the currency range for the Euro US dollar has been basically in a $2.50 to $3 range for the past 6 months. So if we're to look for $1.50 right now, or a dollar move from where it's at, is actually a pretty rational expectation from this breakout. Now, like I said, this is right now the indicators are for a neutral to higher trade. So I would say that if you're bearish, use very tight money management with your stops, because you're probably going to see more of a move and pressure to the upside than to the downside. And especially over as we get through the middle of the week and start to digest the fact that now we're back on a full week's trading, the summer trade is developed, and there's no more holidays until July in the U.S. So the U.S. dollar format for that component of the Euro U.S. dollar is definitely is under pressure right now, and that may be one of the reasons why this has had an exacerbated rally from down at the 111 area up to the 112.77 high of today over the past few sessions. And that being said, if it is really dollar weakness that's causing this, then we probably will settle back into a range trade, and that's why I said be careful. Use that directional pivot of 111.83, and you'll see probably a range trade between there and the high of what was set today so far. And that's if it's just a dollar weakness rally. If this is a euro strength rally combined with dollar weakness rally, then there's a very good chance that any little break right now is a break to buy for the bulls, so they get a chance to make a run at that 113.17 and 113.74 level. There have been numbers that have come out for the Eurozone recently over the past couple days, especially today, where the anticipations of the numbers were lower. They beat expectations, and it's probably going to be the wins that you're going to see over the rest of the summer, because they keep downplaying any good things in the Eurozone and keep sensationalizing any bad or potential bad situations. And then the numbers come out, and of course they come out better than expected, which means that things are not as bad in the EU as they're trying to portray or trying to project right now. I think that the instability that the pundits, if you will, are pointing at, like all the negative scenarios with the EU, it's basically sensationalizing the conflict between the UK and the Eurozone, trying to figure out Brexit and how there's going to move forward into the future, especially after now we have the transition of leadership in the UK. So the euro component definitely has those issues, as well as, right, like I said, the dollar weakness. So with that being said, you should look for, like I said, a range trade to higher trade, and the only thing that would really touch off where you'd probably see the bears come back and go back to testing the lows down at 111 even would be if there is a very high degree of dollar strength. Dollar strength right now has pounded all the major currencies as well as some of the lesser ones. So if that's the case, and there's some major turn of events, like if, for instance, let's say that the U.S. and China come to get terms with a trade deal somehow at the G20 summit, or it looks like that's going to happen very soon, then that would be a monumental thing that probably would cause a dollar rally that would pound the euro once again, at least initially. But I don't see that happening anytime soon, let alone probably for the next 6 months, maybe even a year out. So for dollar strength, I don't see any variable outside of that one scenario that could pound the euro harder. And once again, the euro weakness would only be coming from if they start not meeting or beating the numbers that are anticipated as they come out, which would then give a little bit more credence to bears to selling this market over the next few weeks into the rest of the summer. So, but short term, I would have to go with a neutral to higher scenario going into the July trading, midsummer trade. So I would say over the next couple of weeks as June unfolds, look for the market to stay above that directional pivot at 111.83, and any challenge of 112.77's high from today. I think you will definitely see the bulls come back up, because all your weak shorts are going to start to get pounded at those levels, and I think profit taking on as far as the bulls are concerned probably isn't going to happen until you get above that first target into that second target, in which case then you probably will see for sure a little bit of a digestive trade develop at that point, where that would be profit taking and rebalancing. We also have the rollover. We want to mention the futures contract, and that's another reason why you could see a neutral trade developing in that between that directional pivot and the high of today over the next week or so, because you have the balancing of spreads, you have options expiration and futures expiration for the June contract. So as those things occur, some of the arbitrage opportunities that evolve, the machines kick in. So you're going to see a lot of probably intraday spikes that are erroneous, that have nothing to do with numbers. They just happen to do with balancing and triggering of when certain levels get, as volume kicks also, that the algos will start to churn and burn and make the market swing around on low volume, where all of a sudden there's goes from low volume to high volume at different points of the day, intraday, where you would never see these pockets of trading, especially like midday in the afternoon, lunchtime, or early evening before the foreign markets close. So those are things definitely to be aware of. So for the bears, once again, I would be very critical and careful about trying to be short anywhere above 111.83 right now. I would say take your shorts off the table, or definitely use tight stops, because you're probably going to see a grinding higher rally or neutral to grinding higher rally. But if you're bears, if you do want to trade, look for that that lower brown line there where it says the higher move low level is bullish and key support. Well, if anything trading below that means that higher move low is no longer good, that also means you will see a lot of your buys stops getting hammered below there, and then you would probably see the market try to gravitate to below that blue sloping line once again, and that would bring the euro US dollar down from below 111 even back towards that 109.5, down to 108.5 area. So that's for the bears. And for the bulls, above that pivot at 111.83, you're looking for a challenge of that today's high again. And once again, we're looking for it basically a target at 111.13.17 before you run out of gas. And then at that point, we'll probably see some digestive trading as it tries to eke its way back up to the 113.74 area. So with that being said, there's not much more to look at for the euro US dollar, but just remember once again that this market right now, with this explosion and this volatility over the past few days, could be more attributed to dollar weakness than euro strength. But right now, because of the dollar weakness and the euro positive number response, that's definitely one of the reasons why you can probably this rally is unfolding, and probably will also maintain a neutral to higher trade. So with that being said, be very careful with your stops to the short side, and always you have to use good money management models and use discipline and have a trading plan at all times. And good luck with all your trading, and please like, follow, and share this video. We're trying to build up the channel and build up some formats and get some scheduled time in for our listeners and find out which markets they most like to hear about. So, and if you'd like to know more about some of the information or things that I've done, I've written a book called High Probable Japanese Candlestick Patterns, and you can find that on Amazon on Kindle and paperback, and through that you can utilize the best buy and sell patterns used for over 400 years that can help Forex traders, futures traders, stock traders, options traders, you name it. There's all kinds of different trading opportunities that can be found from using these signals, and even if correlated markets, so which are discussed in that book. So if you want to know more, check it out on Amazon. And with that, thank you very much. You have a great day.